Hi, thanks for tuning in. This is the ASX and Sectors weekly chart analysis for the week ending 29th of May 2026. The first chart is the S&P ASX 200 index, the XJO. This is the parent index of the Australian Stock Exchange. Prices closed slightly higher this week after testing for supply earlier in the week below the previous bar's close. And then price just pushed higher in response to that period of testing for supply and up to this equilibrium level just here. Highs of the range are through here, lows of the range down here, and prices trading right in the centre of that range at the moment. Looking slightly more positive than negative following the mini shakeout from last week. Volume did increase to above average this week, which was supporting the push higher and suggests that what supply was drawn out when price pulled back below the previous bar's close was bought by the market, and the market kept pushing higher and buying its way higher to close up at this equilibrium level just here where price pulled back from 3 weeks ago. So that was quite a strong move really, and suggests the market may be preparing to push higher. This is the mid-cap sector. It's perhaps been a more logical chart to read more recently. You've got the breakdown line in the background here, highs of the range coming through there, lows of the range down here, where strength emerged back in late March. Since then, prices pushed up to the highs of the range, or this breakdown line in the background, and the market's been consolidating sideways for quite a period of time now. This is the market absorbing supply, potentially accumulating and preparing for a push higher, but that remains to be seen at this point in time. The market does seem content to trade sideways here and perhaps wait for more favourable trading conditions to emerge. Whenever weakness does come in, the market's been prepared to buy that weakness, which suggests there is a more positive tone in the market. The sentiment remains positive, but there's just that element of uncertainty across the markets at the moment, and that's holding these markets back generally. This is the small ordinary sector. They did push higher this week after what was probably some form of shakeout last week. Lows of the range through here. You've got a bit of a combination of breakdown lines in the background here, forming a little zone. After strength was found in late March, price pushed up to the highs of that range, and since then it's been trading sideways in a similar fashion to the mid-cap sector. There was this shakeout sort of bar last week, and perhaps that'll form a terminal shakeout at the end of a period of consolidation, and the market in response did push higher and up to this breakdown line in the background on an increase in volume, which does suggest that the market is stronger than weaker and would perhaps like to go higher. And perhaps it's just that uncertainty across the markets at this point in time that's just holding the market back. This is the ASX financial sector, comfortably the largest sector in Australian Stock Exchange. Lows of the range down here. You had this period of consolidation in the background. Intermediate level through the middle. Highs of the range up there. You can see that supply was drawn out. Both times the highs of the range were challenged. The market moved into a period of consolidation, attempting to absorb that supply both times. This bar was on announcement from the RBA, the Reserve Bank of Australia, with a change in interest rate target. Last week saw a modest push higher, suggesting that the pullback was a little overdone, and you effectively had a test for supply this week. It's a bit of an elongated, awkward-looking test for supply, but that's effectively what the market was doing. The mid-bar close on an increase in volume and about average volume suggests that the market continues to be more positive down here, and some buying did emerge. I expect, given reasonable or neutral trading conditions, this market will probably float up to the breakdown line above in response. This is the ASX metals and mining subsector, and price has been more buoyant in this market more recently. You've got the highs of the range through there. You can see that the market, once it found strength back in late March, it pushed up. It went sideways for a period. Some supply was drawn out when the market challenged this level up here. The market pulled back just for one bar and effectively tested the market for supply there. And the market was obviously quite happy to continue higher because the pullback was bought and the next bar is up. So this market is stronger than weaker, no doubt. Price is pushed above the highs of this range here, and it's going to come up and challenge this level by the looks. Spread was relatively narrow considering the increase in volume this week, and that does suggest that supply is being drawn out. But the high close, pretty much at the week's high, suggests the market is stronger than weaker and it's buying that supply as it's being drawn out. And that then suggests this market feels it's going higher. So we'll watch this with interest. The ASX gold sector reflects the price of gold to a large degree, as you would expect. Lows of the range through here, breakdown line in the background. Price has pulled back, and it did come back this week and pretty close to testing that level for strength. It's traded inside the previous bar's range for most of the week and closed back adjacent to the previous close on average volume. In fact, volumes have been very similar the last 5 weeks. This market's just waiting for the gold price itself to give an indication of strength or weakness. And this market's just waiting for that to occur. It's trading sideways. It has done for a little period in here, effectively. And it doesn't look particularly weak, but it's certainly not looking strong at this point in time. This is the ASX energy sector. Price did pull back again this week, probably on the back of the softer oil prices. Lows of the range through here. The market threatened to break down on this bar. Price recovered over 2 weeks and it's pulled back again this week. It remained above that bar's low, which we'll call the last gasp lows at this point. Volume was again below the average, slightly increased over last week, but still below the average. So this wasn't a serious sell-off at this point in time. This was the market just pulling back in line with the lower oil prices. This is the ASX healthcare sector. This market's been particularly weak for some time now. The market's been breaking down several times more recently when it appeared there may be an attempt to accumulate. The market has broken down again each time. And now we're back down to a new low. The market's attempting to go sideways again. But this market really needs to show some real underlying strength before you could really jump in and buy this market. This week's bar was very narrow spread on an increase and slightly above average volume. So it does appear that there was buyers in the market absorbing supply. But you would need to see quite a bit more activity in this market, positive activity, before you took it any further. This is the ASX industrial sector. It closed higher this week. You've got the breakdown line in the background coming through here, the little zone. Strength was found back in late March. Price pushed up to that level. It has been trading sideways ever since. Last week's sort of shakeout sort of bar, it's a bit of an elongated test for supply. Saw the market push higher in response. The close well off that week's low suggests there was buying support come in here, and the response this week effectively confirms that. The market's pulled back, tested the lows of all these bars for strength, and the market's then bought it up. And price is now sitting right at this breakdown level. And it's looking like it could issue a challenge to that level, probably just waiting for more favourable trading conditions to emerge. That uncertainty across the markets worldwide at the moment is really causing a hesitation in many markets. And similar to many other sectors in the Australian Stock Exchange, this market's looking a little more positive than negative, but it's not willing to really push higher and show intent at this point in time. This is the ASX consumer staples, which overshot its lows more recently. You've got the lows of the range coming through here. This is where the market overshot those lows. There's an equilibrium level sort of through here where the market is pretty comfortable that perhaps that's considered by the market to be fair value for this sector, because the market has traded sideways within that range for an extended period of time. You've got the highs of the range right up here, and the market recovered from overshooting its lows last week, and this week has effectively traded within the range of that previous bar in consolidation mode, testing for supply and absorbing the supply as it's been drawn out. Volume was slightly above the average and slightly increased over last week, which suggests this market, which combined with the positive close, suggests this market was absorbing the supply within this zone, within this range. It would probably take considerable weakness emerging across the rest of the market for this to see any significant push higher. This is really considered a defensive sector where the market puts money in when there's uncertainty across overseas stock markets or if overseas events cause issues. This is the consumer discretionary sector. Lows of the range through here, little intermediate level there, highs of this mini range through there, breakdown line in the background right up here. This is a consolidation zone. Perhaps it's an accumulation zone. We'll find that out in hindsight at some point. But it does appear that the market is absorbing supply down here and possibly accumulating. This week saw volume reduce slightly, but remained above the average. And using that volume, price did push higher. So that was the market actually buying supply within this zone, closing pretty much at the highs of the range and in a good position to test for supply early next week and then perhaps issue a challenge to the highs of the range through here. Remembering that there's quite a bit of room for this market to move before there's any serious supply in the background, which is right up here at the breakdown line. So this market could move with relative ease if it chose to issue a challenge to the highs of the range. This is the ASX property sector, and it's just grinding higher at the moment, very slowly. Here's the breakdown line in the background. And you'll note that all these bars have just a slightly higher close as the market pushes higher, pulls back, pushes higher and pulls back. Each time making slightly higher highs and absorbing any supply as it's trading sideways at the lows. Volume did increase this week to well above the average, remembering it did pull back below the previous bar's close, effectively testing the market for supply before it was pushed higher. Any supply that was drawn out during that period was obviously bought, and then the market kept buying and price pushed right up to this breakdown line in the background. There is likely to be supply to the left in here, as there is above this secondary breakdown line here. So there is going to be some resistance if price does issue a challenge to this breakdown line. The way it's going though, you would probably expect it would just continue to grind. It may not punch through that and thrust higher. It perhaps will more likely just grind through it, absorbing the supply as it's drawn out. Just back to the parent index quickly before I wrap up. The market did test for supply below the previous bar's close, which was like a mini shakeout. Testing for supply, price did push up to this equilibrium level just here. Highs of the range through there, lows of the range through here. The market's certainly looking a little more positive than negative now. Looking a bit negative through here. Seems to have gained some strength now, but that uncertainty remains. That's going to hold the market back to some degree. Volume did increase to above average this week, which suggests that the supply that was drawn out this week was clearly bought by the market. And that's another sign that the market's a little stronger than weaker. If more favourable trading conditions do emerge, I expect this market will respond positively to them. Okay, thanks for your time. Back again next week. See ya.